most active price range at the moment that we're experiencing is from the £2 to £5 million. I think below that is there's a lot of stock that's come onto the market over the last six to 9 months, and I think there's oversupply below too.
I operate in the +5 market, and I'd say between 5 and 10 is really quiet at the moment. There's really not very much activity, but anything +10 is really busy. Pin in Hyde Park, mile radius around Hyde Park.
My feeling is that the market from about 2 million down is mostly sort of smaller, sort of bolt hole type properties for more of the international market that used to buy those kind of things. They're not really long-term properties.
The transactional costs have increased, so that's becoming less of a, and it is a little bit harder to move if you're doing the normal upward or downward move, you know, in terms of the transactional costs. But apart from that, the reasons remain the same, I think, for buying or selling property.
Again, we've got international buyers, domestic buyers, still European buyers, more buyers coming in from Greece, which we've noticed in the last couple of months as well. We've actually got had a good Greek client at the moment who's looking to invest in London. So it's patchy, up and down.
It's interesting to see that people are looking at London on a much wider scale, and investors from overseas are buying things for the future of their children. They're coming in for medium, long term.
Recently, a lot of it's been about valuing very short leases, under 10 years. Because there are a lot of speculators who buy up leases with a year to go or something like that, put in a lease extension claim and try and maximise the discount so they can maximise their return. So you get a lot of cases about that. That's quite shocking.